What is up, stock compounders? All right, we got 11 people here already. Good morning or good evening, wherever you are in the world. I want to start this one. Just pop in the chat what book you're reading right now. I'm very curious what people are diving into these days. I just started reading Being Online from the creator of the Alibaba Cloud. I don't have anything to share about it. I really just started, but I'm excited to really get my head around the cloud and all of the implications as we move more and more into the cloud globally. So let me know what book you're reading right now. I promised my community post. I promised on my community post I would take 5 questions from that Q&A post. So we'll just kick things off there. So, I don't forget, right? Like every time I just focus on the live chat because that's where the energy is for me, right? In real time, engaging with you guys. But let's just grab a few questions first from the community post. So Timothy, looking for a deep dive on Micron. This isn't really the format to go into deep dive on Micron. But thanks for that poke. Maybe I'll put out a video soon, kind of really digging into some of these questions that you asked in that community post. So thanks for that, Timothy. Hi, Brad. Which 13F are you looking forward to the most? I am looking forward to Phil Towns in order to better understand his strategy around sprouts, right? So we saw, of course, in Q2, I'm pretty sure it was, that Phil Town added Sprouts Farmers Market to his portfolio for the first time. I think prior to that, he had been selling some put options for Sprouts, but this was the first quarter that he actually held the equity. So yeah, I'm curious to learn more about that from Phil Town as well. I don't know how much we're going to get from the next quarterly filing where he releases his holdings. And I don't think it's a 13F exactly because of the way the fund is structured. I don't think it's a 13F per se, but he does reveal his holdings. It's kind of tricky to find. You've got to go to sec.gov and search, what is it, World Funds Trust or something like that. And then there's like 10 or 12 different funds that file under World Funds Trust. So you've got to kind of click through and see which one is for the Rule 1 fund. But which am I looking forward to the most? Well, it's hard to say because the guys I follow most closely tend not to do much. So I don't like to get real excited, real worked up about their 13Fs because most of the time there's no new additions. But some of the top ones I like to see if there's been any changes. Li Lu, Greg Alexander, Norbert Liu of Punch Card. Those are a few that I really like to dig into and hope, cross my fingers that there have been some changes. Monish Pabrai, obviously. Other than Baba, he hasn't been doing much in the way of U.S. stocks, which show up through 13F filings. So it's been more tracking Monish Pabrai on Ticker Terminal to see what he's doing internationally. It sounds like he's buying more positions in Turkey. Okay, so Racist is the big one that he's been plugging in like every Q&A that Monish Pabrai has done over the last handful of months. But it sounds like there's a couple more companies in Turkey that Pabrai has been investing in just recently. So hopefully we get to see those soon. I'm very curious what those are. So those are a few 13Fs I'm looking forward to. As the bubble refuses to burst, are you tempted to reduce your cash on hand? What percentage do you have on cash? So I don't have a lot of cash right now as compared to what I'm invested in equities. I have maybe 10% in cash at the moment. So, but even if I had a lot of cash, I don't look at macro, factors like when the bubble might burst, right? I have no ability to predict that. So, I think I'd probably be doing my portfolio a disservice trying to tweak, how much cash versus how much I am invested at any given time, based on where I think the market is and what's going to happen in the near term. I think that's a very difficult game to play well. And I don't think I have any ability to play that game well, so I just don't play it. I'm waiting until I find very compelling investment opportunities, and that's when I deploy my cash. It has nothing to do with where I think the market is at the moment, because in any market, right, in the most incredible bull markets of all time, there are still opportunities. There are still investments to be found with promising future returns. There are still businesses that can be bought at a discount to what they're worth. So, it's harder. Obviously, it's harder when, the frenzy is on, when, the cab driver is giving you stock tips, right? There's a lot of signs we can kind of pick up on that the market is pretty wild at the moment, but this is not how I run my portfolio. So again, I have about 10% on cash in the portfolio. So that's 2. Let's get 3 more. How often do you think about changing the investment strategy that you are currently following? I don't really think about it that way. I don't think about, oh, should I change this? It's more, I try to be a continuous learning machine. And as, new approaches cross my desk, I adopt what makes sense, what really seems to have merit behind it, and I discard most of it, which I don't think has merit behind it. So I like to keep myself open. Like just recently, after reading Investing for Growth by Terry Smith, which is really just a compilation of letters to shareholders from Terry Smith, it really got me thinking about, maybe it's worth paying up a bit more for these great, long-term compounders, right? These companies that have an incredible advantage within their industry and are likely to remain at the top of that industry for decades. So, that's changed up a little bit for me. I used to be more focused on buying cheap. I think now I'm a little bit more focused on buying a company that I'm happy to hold for a decade or hopefully multiple decades. So that's a big shift. And it's a shift that Monish Pabrai has gone through, reading the investment letters from Nick Sleep. So it's not that I think about like trying to change my investment strategy. It's more, I'm trying to continuously learn from the best investors in the world. And, if things resonate, adopting those things. One of the real important lessons that Monish Pabrai got early on in his business life was, if I see a great idea from someone else, I'm going to force myself to clone it. Okay, because our default mode as humans is to want to come up with our own ideas. Okay, we want to have original ideas. There's something about copying, about cloning, that just doesn't sit right. And I think a lot of that is from school, at least for me, taking tests and all that. You weren't supposed to look at anyone else's paper. It's supposed to be your work. Your original work is what determined your score. Largely, obviously, there were group projects and things like that, but most of it really felt like you had to do your own work. And that's just not the case in investing, okay? And it's hard for a lot of people to make that shift from, this needs to be my unique work to, hey, I can piggyback on the best in the world and get an incredible advantage over typical investors. So anyway, that was a long answer to your question. Thank you, DSMRM. How was the trip to Turkey? I'd be at the live stream if it weren't for work. Thanks, Jeremy. Yeah, It'd be great to see you here soon. Hopefully we can fit you into where you can make it with your work schedule. So this is something the punch card guys keep joking about. I think I've never been to Turkey. Okay. I think maybe that was from Pabrai, knowing a guy in Turkey, going there, having the guy show him around. But yeah, I've never been to Turkey. I'd be happy to go. I hope I can go soon. But kicking the tires on companies like Racis and maybe some of these other companies that are on Pabrai's radar isn't something I'm doing on the ground. But anyway, just one. Hey, Brad, how's your Naked Wines research going? Yeah, it's going okay. There's a couple really solid write-ups that I'm really trying to sink my teeth into. There's 2 on MOI Global for Naked Wines. And then another guy I am connected with on Twitter, he's done a lot of work on Naked Wines, and he just, willingly sent me his research on Naked Wines, which is awesome. It's very in-depth. So I hope to have something out on the channel for Naked Wines within the next week or 2. It's a compelling opportunity. Really came across my radar, seeing that Norbert Liu added to the position this month in October of 2021. He added 12% to that Naked Wines position. So, and it's kind of cool too that the CEO, the CFO live in Napa, California, which is an hour from where I live. So I don't like to meet with management, but there's something that feels comforting about the core business operations being very close to home. I don't know, maybe that's a bias I need to dig into more, but yeah, so hopefully you guys see more soon on Naked Wines. And just one more, just to keep the people happy on the community post. How much time do you spend on your YouTube channel per week? That varies a lot. The thing about the YouTube channel is there's 2 ways that people think about making content on YouTube. Okay, the first is being a creator, right? Having to come up with content, which sounds like a lot of work, and there is a bit of a mental hurdle there, I think. That's not how I approach it as much. The second way is to document, okay? So the way I like to make content is, what am I currently researching, right? What am I into in the moment? And then just put that up on YouTube, right? And I get feedback from all of you smart investors, beginning to great investors, much better than I am. And it really helps. It helps me go deeper into that process of learning new subjects. So I spend quite a bit of time on it, but a lot of it is stuff that I would be researching and doing anyway. So you guys know I don't edit my videos, which cuts out a lot of the time that most YouTubers put into their channels each week. And I'm so glad I made that decision early on, because none of you have expectations that I'm going to be editing my videos. And so I can just hit record. I can say my piece. Most of you are going to watch it at 1.5 or 2 times speed, because, I don't talk that fast. It's not because I'm trying to make longer videos. It's because, I don't know, maybe there's some kind of disconnect between my brain and my mouth, or, I just don't think that fast. It's possible. So, but so I can't really quantify the number of hours per week, but it's not much above and beyond what I would be spending time researching anyway. So with that said, let's hop back into the live chat. We got some action in here. Again, if you guys are just tuning in, let me know what book you're currently reading in the live chat. Okay. Let's help each other out. If you guys have found a fantastic investing book, or just other book, maybe it's a book that's totally unrelated to investing. punch that in as well. Hey, Brad, hope you and your listeners have a great day. Yeah, I hope that as well. I hope all of you have a fantastic day, and that you are inspired to really get that compound growth engine in your portfolio going like I am. BAMS, hi, racist stock infidelity shows RYSKF, over-the-counter symbol in position. Bought it by calling international order number. Do you see the same? Yes. In my Fidelity account, I invested in RACIS through a Roth IRA, and it does say RYSKF. And I was told by the International Trade Desk that it's the same as RYSAS in terms of buying and selling. So that's, take that for what it's worth. But it shows the same over-the-counter symbol in my Fidelity account for RACIS. Tim, let's hype the chat. All right, Tim. Yes, you are hired, my friend. Bought RACIS through Fidelity, and it's the same RYSKF, right? I was told by Fidelity it is equal in value and ability to sell. Yes, that's what I was told. Luis, longtime watcher, subscriber, Luis. Love you, buddy. Fellow stock compounders. True, Luis, yes. Any word on other stock positions Monish is building in Turkey? Yeah, what do I want to say about that? I got a tip through Twitter. I'll just share this with you guys because you are loyal viewers, loyal subscribers. I got a tip that one of them may be, I'm going to butcher this. Well, I'll just give you the ticker. It's ANHYT. Anadolu Hayat Emeklilik. Terrible. I just know that's terrible. It's a pension and insurance company under 500 million market cap. So pension and insurance, life insurance, looks like primarily. So for what that's worth, maybe worth digging into that one. Hopefully, again, soon we're going to see through ticker terminal what Pabrai is buying in Turkey. Let's see. Anything else? Intro. Good morning from Toronto, Canada. Morning. Intro invest. Warren King. What's up, stock compounders? Yes. What is up, Warren? Love the first name. Luis. Letting Go, recommended by William Green, more spiritual stuff. Yeah, Letting Go. I guess that's a book that was recommended by William Green. Amazon. You're going to make me type in characters in the image. That is just rude. Letting Go. Let's see if I can get a quick. Oh, wow. So is this David Hawkins? I've just been listening to, tough to get into it. Felt very woo-woo to me. I'm still getting a sense of what I think about it. But Letting Go, Luis, I assume that's by the same author, David Hawkins. The Pathway of Surrender. Let's just give a quick pitch here. The inner mechanisms of surrender was found to be of great practical benefit and is described in this book. Dr. Hawkins' previous books focused on advanced states of awareness and enlightenment. Over the years, thousands of students had asked for a practical technique by which to remove the inner blocks to happiness, love, joy, success, health, and ultimately enlightenment. This book provides a mechanism for letting go of those blocks. Okay, yeah. That looks interesting. I think I'll at least take a bite out of that one. Thank you, Luis. Tim, hey from Peru. Tim from Peru. When I see Peru, Tim, forgive me for this if it's some ignorant, Yankee thing, but I think of guinea pigs. Tim, let me know if you've had a guinea pig in the last week. Poor little guinea pigs. They're pretty cute. Luis, he also recommends The Surrender Experiment. Okay. 2 books there recommended by William Green. I support the deep dive on MU. Cool. Yep. Thanks for that nudge there. Matthew. Hi, Brad. Fellow value seekers. I like that. Value seekers. hunting for value. And I would add hunting, at least personally, I would add hunting for, not just value, but value that I can hold on to for a long time. And that value is going to increase, right? So we got a lot of growth in there as well. We got a super chat. Pravesh, do you have a question, my friend? I just see the super chat. Thank you for your fresh insight. Thank you, Pravesh. Appreciate that very much. Let's see. Jane. I think it's Jane. Baba is early November. Could be interesting. Baba is early November. What do you mean by that, Jane? Hopefully I'm saying your name right. If I'm not, you can give me a pronunciation of it and I'll try harder. Yeah, Baba. Still long and strong on Baba. Neil, I bet we see Intel on more 13Fs. Yeah, let me just take a quick peek at what the super investors have been doing with Intel recently. So there's 9 super investors in it. Michael Price has the largest position, almost 13%. Seth Klarman, around 10%. Daniel Loeb, okay, that's a big ad. Under 5%, but increased like 14 times in the last quarter. This would be the second quarter because I don't think Daniel Loeb has filed his 13F for the third quarter yet. So, I'd say three super investors have a decent size bet on it, around 5% or more. So yeah, it'll be interesting to see what super investors do with Intel. That's something I'll be watching as well. John, love the chapter Richer, Wiser, Happier on Sir John Templeton, particularly in the way he controlled his thought process and emotions. He mastered himself, something not easy to do. I mean, this is such a big part of investing, guys. It is, I think it's even bigger than, analyzing businesses and trying to figure out what something is worth. Because even if you're indexing, you still need to understand this piece. You still need to understand the psychology piece of investing. Unless, somehow you're able to set it and forget it, where you're making contributions every month or every quarter automatically, and you just never look at it, okay? Most investors, even if they're passively indexing, they're still going to be looking at their portfolio, and they're still going to be very tempted to change things as the market goes up and down. So again, even for passive investors, I think it is very important to just understand how you're going to respond emotionally to the mood swings of Mr. Market. But yeah, that was a great chapter, Sir John Templeton. And I was also very impressed at how many investments he made over his lifetime, and still how well he was able to do. Okay, so Buffett and Munger and Pabrai, a lot of great value investors talk about concentrating. Because Buffett would say, why take money from your highest conviction bet to put into your 15th highest conviction bet? But Templeton, he figured out a different way to really and still made it work. So again, can't recommend this book highly enough. Richer, Wiser, Happier. Neil, I have heard Monish say Micron is not a set it and forget it business. What do you think he means? Something about cyclicality. Yeah, I think I responded to you, Neil. Might have been on Twitter. I don't remember where it was. But so Micron is still susceptible to being disrupted. Okay, they're in this technology industry, right, of making memory chips. And the speed of change in that industry is very fast. So even though they have so much capital invested, they have so much, they have so many patents. Okay, they have so much intellectual property in the space of manufacturing memory chips. Some new technology could come out of left field. Okay, especially when we're in this age of exponential, growth in technological innovation. So that is a threat to Micron. Okay, even though you may look at them today and think these guys are undisruptible. Okay, because of the position that they're in this oligopoly, right? With so much capex required to compete with them, so much money required to compete with them. I could see in the next handful of years a new technology coming in where Micron is now obsolete. Their existing technology is obsolete. Okay, that is a threat that I see from Micron. So I don't think it's a decade or more long play. And Pabrai says the same thing. So that's what I think he means by that. Thanks for that question, Neil. Tim, John, I also liked how John Templeton said investors should save 50% of their income. Yes, that is huge. I mean, that is such a big part of this game, guys. If you look at the compounding formula, right, the compound growth formula, there's three factors. There's really just three factors. Two, which I would argue, are much more important, are time, so the length of your runway, and your rate of return. Okay, how skilled are you in this game of investing? That's going to show up in the rate of return. So those are exponential. Okay, the more we can optimize those two factors, the less the other one matters. But the other one is contributions. Okay, how much money are you putting in to your portfolio? And that's really what John Templeton is referring to here. If you can save 50% of your income, it just gives a lot more gunpowder to those exponential factors of returns and time to work wonders. Okay, so I think it's hugely important, and that's the whole premise of Mr. Money Mustache, right? Pabrai loves Mr. Money Mustache. And I think the thing that Pabrai really respects about Mr. Money Mustache is how disciplined he is when it comes to spending. Okay. Mr. Money Mustache, I think he was an engineer maybe. So he made good money, right? He made good money. But the real key for Mr. Money Mustache is he drove expenses down to the floor. Okay. And was able to save a ridiculous, not save, invest a ridiculous amount of his income every month. So really important. That's a very easy way for most of us to get to the promised land faster, just to set aside more of our income to our investments. It's hard for a lot of us to do, right? We feel like we're making sacrifices in the short term. But I think the reason for that, it's easy to get caught up in keeping up with the Benjamins. It might be the expression, trying to keep up with the neighbors, thinking material things are going to make us happy. Figuring out, what's really going to make you happy, right? What is at the root of happiness for you? I think you're going to realize it doesn't have much to do with material things. So there's a lot to explore there, but thanks for that comment, Tim. Brother Leo. It's funny, my son's name is Leo. So now I have a son Leo and a brother Leo. Brad, hi, for those of us small investors, what would be bare minimum to invest in Races through Fidelity? I don't know. You just gotta factor in, I think it's like a $90 transaction fee for buying Races through Fidelity. And then there's like a 1% currency exchange rate. So I can't answer that for you. You just have to think, well, obviously you wouldn't invest $100 because it would virtually all get eaten up through fees. But you've just got to figure out, okay, what is my expectation for races over the next decade or two? And what is the cutoff? What is the threshold in terms of making it worthwhile, considering those fees? So that's how I would think about it. Tim, I spent several weeks in Izmir, Turkey in the mid 80s, long before I was an investor. Cool. Tim Brown. Yeah, I'm sure I imagine it's changed a lot. I don't know Izmir. Maybe it's more rural than something like, I mean, everything's going to be more rural than something like Istanbul. But yeah, it's been a wild ride, it sounds like, for Turkey over the last 4 decades. Salient, thoughts on Facebook? Yeah, seems like everybody wants to talk about Facebook over the last couple of days. So I retweeted Edwin Dorsey. I've been really impressed by Edwin Dorsey. I think he's like 21 or 22 years old. He runs a newsletter, and a lot of his clients come through Facebook. But I think he puts out like 2 stock ideas a month through his newsletter. And if I remember correctly, he's grown that newsletter over like 6 months. Well, it was 1.5 years, I think. And then after a year, he started charging like a premium. So there's a couple ideas that just the premium subscribers get access to. I think he's making like $300,000 from that newsletter. Okay. So very impressive from Edwin Dorsey. And I should find it. What is the tweet that Edwin Dorsey put out recently? If you guys are following me, you may have seen it. But so what he said about Facebook, he said, yeah, the youngest and most social media savvy people I know are also the most bearish on Facebook and Instagram. No strong opinion on the stock, but the disconnect between 40-year-old PMs and young users is a real thing. Okay. So Facebook, I don't use Facebook. Okay. It's funny. I just went on the other day. I haven't been on like 3 months. I saw I had messages from people I knew that I would have liked to have seen, but I just don't go on Facebook. I do use Instagram really just to message other people. I have a couple groups on Instagram where I sort of send group texts through that, but I don't post anything on Instagram. I don't post anything on Facebook. So, it's easy to look at the numbers for Facebook, the revenues, the free cash flow. Obviously, they have a lot of CapEx, right, that they're anticipating over the next couple of years. But from my own user experience, I just don't use it. So it's hard to get excited about a company whose product I used to use and I don't use anymore. All right. And I think, from what I'm seeing with WhatsApp, people migrating over to, platforms like Signal, I don't know. It's hard for me to get excited about Facebook, but I'm sure there's a lot I'm missing. I am not up on AR and VR and probably a lot of the innovations that are happening that are being led by Facebook. So probably not the right person to ask, but just my 2 cents. Tim Brown, I removed from my phone, and I'm glad I did, Facebook. I assume he's talking about Facebook. And Schumann, A Man for All Markets, the biography of Ed Thorpe. Got interested in him after reading Richer, Wiser, Happier. Yeah, I read A Man for All Markets. I think it was last year, pretty shortly after it came out. It is a phenomenal book. I didn't find a lot in there in terms of making myself a better investor, like lessons that would make me a better investor. But it's a fascinating story. Ed Thorpe going from really figuring out how to beat the casino at games like roulette, right? How do you figure out how to beat a casino at roulette? Well, Ed Thorpe figured it out. And I think his big one was blackjack. So, and then from going from that, realizing, hey, I'm probably going to get killed by these casino operators if I keep, going in there and ripping them, or not ripping them off, winning. They don't like that. And casinos used to operate more like the mafia, okay, than they do now. They're more corporations now, which was interesting to see Pabrai get interested in beating Vegas. He went to Vegas. He won like six figures, I think, in one weekend in Vegas. And he was told by that casino he wasn't welcomed back there. But the nice thing about 2021 is Pabrai wasn't worried about getting killed, right, by the casinos. It's just he can't go there anymore. But yeah, again, fascinating book. I wouldn't put it near the top of my list in terms of books that are going to make me a better investor, like I said, but it is a fascinating read. A Man for All Markets. And Ed Thorpe, one of the, if you look at his track record, I forget where I saw this highlighted. If you search Ed Thorpe performance, investment track record or something like that, he has an incredible performance track record in investing. So, got to admire the guy for figuring out, all right, which casino can I play in? For Ed Thorpe, that was the stock market, and just making a killing. Finishing One Up on Wall Street. So another fantastic book, One Up on Wall Street. Fooled by Randomness by Taleb. Yeah, this is, so I posted this to Twitter as well. I framed it a little bit differently. I said, what book do you reread frequently? Okay. And a lot of these books that you guys are mentioning are turning up in response to that Twitter, that tweet that I sent. Fooled by Randomness by Taleb, an investing classic. Tim Brown, Turtle Trader is what I'm currently reading. Yeah, Turtle Trader. I saw something about that recently. I forget exactly what that's about. It's some system of trading, I think, that was developed. And there's this whole community of people who have come out of Turtle Traders that supposedly have done very well for themselves. So, and I think I saw The Popular Investor on YouTube talking about Turtle Trader as well in one of his videos. It's not something I've dived into at all, but I'm curious, Tim, what are you learning about Turtle Trader, and does it apply? How does it apply to kind of a value investor framework? Nick Sleep, Buffett, Charlie Munger. I'm curious if there's overlap there, or if it's purely playing the psychological aspect, like a shorter term trading kind of situation. Currently reading Influence, The Psychology of Persuasion, New and Expanded. I wonder how many principles Cialdini added to his new and expanded edition of Influence. I should probably check that out as well. Let's see. Jose, Salient, check Frank Tabor. He just made a video on Facebook. Yeah, I saw that this morning as well. That's going to crush it. I think it was just maybe 2 or 3 hours ago that Frank put out a video on Facebook. So definitely worth checking that out. Sean, hey Brad, Sean here from the Air Force Academy in Colorado. What is up, Sean? What are your thoughts on over half of Alibaba's earnings since IPO being asset write-ups? Have you heard anyone address this well? Over half of Alibaba's earnings since IPO being asset write-ups. Yeah, it's a little tricky to kind of tease out within Alibaba where earnings are coming from, okay? And trying to wrap your head around, what is this business worth, when you strip it down? Okay, if you strip out all of the kind of startup bets that are currently losing money. Yeah, that's something maybe I'll get into in a future video with Alibaba. But yeah, it's definitely not a 6-inch bar in terms of a business. Like there's a lot going on. with Alibaba. I mean, you could make it a 6-inch bar. The way I made it a 6-inch bar was looking at, okay, what are the core assets, right? And looking at the core assets and looking at Alibaba Cloud is really what I zoomed in on. Let's assume Alibaba Cloud continues its growth trajectory that it's had over the last handful of years. What I came up with was Alibaba Cloud, like the value of Alibaba Cloud is going to be the same as the entire market cap when I bought the company, okay? So when you're able to find investment opportunities like that, it really makes it simple to decide to pull the trigger or not, okay? And that's really kind of the easiest way, I think, to look at Alibaba, is to look at, what do I think the most valuable aspect of Alibaba is going forward? What do I think it's worth in 5 years? And if I can pay, that price today and get everything else for free, that's really protecting my downside. Okay, that's how I see it. We got another super chat. Tim A, keeping up with the Joneses. That's what it is. What did I say? Keeping up with the Benjamins. Guinea pig is oily. So it seems like Tim out of Peru, not a huge fan of guinea pig. I think I like oily. I like duck, and I consider duck to be oily. So maybe I should give guinea pig a try at some point. Anyway, let's see. Nice to see you, Red. You the man. Jose, thanks for that heart with it looks like a medic symbol. That's, at least that's how I'm interpreting that. Thank you, Jose. My wife is a nurse, so I have a special place in my heart for that symbol. Luis, David Hawkins is correct. Yeah, okay, so David Hawkins wrote the book that Luis is reading, and I already forgot the name, and I already closed my Amazon tab, but you guys can scroll up. Benjamin, what do you think about Nintendo? So Nintendo isn't a company that I've looked into. Yeah, there's been a fair bit of mention of Nintendo in value investing circles that I frequent, but I'm not really interested in the gaming industry. Okay, I know there's potentially a lot of growth in the gaming industry, but I don't know anything about it. I'm not a gamer, and I don't know that the industry is particularly beneficial to humanity. Okay, that's not to say that every investment I make has to be beneficial to humanity, but there's something about gaming. I'm just not interested in it. I'm not interested to own a business like that. I'm not interested to really spend the time to understand the business and the industry, because I'm just not interested in gaming. So maybe a great investment. It's not in my wheelhouse. Andy, morning, Brad, saying hello from Canada. Andy, where in Canada are you? I've been, actually, you guys, there's 46 of you here. I hitchhiked through Canada, okay? It was like 2011. I started in Wisconsin, where I was living at the time. Hitchhiked up to Canada, right across the border. I met a buddy, and we hitchhiked all the way west to Calgary and up to the Arctic Circle. Okay, that was a fun trip. It only took 2 weeks to hitchhike from Wisconsin to the Arctic Circle. Okay, a lot of generous people out there, willing to give some young lads a ride. One ride was multiple days. Okay, this guy in a pickup truck. One of us just laid down in the back of the bed of the pickup truck. The other one up in the cab. It was fantastic. Okay, so it's one way to travel. I think perhaps an underrated way to travel. Probably wouldn't do it at this stage, having 2 kids, but it was a good time. Anyway, we're in Canada, Andy. Longtime lurker here from Bay Area. Awesome. We've got a fellow Bay Area resident here. Are you up for a cup of coffee? Ooh, putting me on the spot, Bah. I kind of like that. Maybe. Hit me up in Twitter, Bah. If you're not on Twitter already, create an account on Twitter, send me a DM, tell me you were the one who hit me up in the live stream wanting a cup of coffee and a chat. Let's go from there. Pravesh, thank you for your fresh insight. Yes. Andy, have you had a chance to look at the option dividend capture strategy from Matthew Peterson? Or the put option strategy? Yes, the put option strategy is the one I'm much more familiar with from Matthew Peterson. The option dividend capture strategy, it's not that interesting to me. And I think the reason for that, it's very short term. It's sort of a short-term arbitrage, right? And, it's probably going to go away soon. It's going to take a lot of work to set it up and really optimize. And it's just not how I want to spend my time. Possibly, compelling returns from a strategy like that. But I want to spend my time finding businesses that I can park my capital with and just ride off into the sunset. So that's not consistent with what I want to do. But the put option strategy is very compelling. That's where Matthew Peterson, Peterson Funds, sells puts on companies that it wants to own, right? Like Seritage, for example, and is able to effectively buy those companies quite a bit below the current market price with that strategy. So that is very interesting to me. I do want to dive deeper into that. So if any of you sell put options as a way to get into a long position in that company, hit me up. Send me a message on Twitter, a DM. My DMs are open. I want to learn more about that. Let's see. Michael, hey, Brad. We got Jane. Let's see. Kaz, any thoughts on why Pabrai sold 14% of Shinnikin recently? So my understanding with Pabrai and Shinnikin is that he's still bullish on Shinnikin. I think what's happening is he just needed to free up some capital to buy some of these Turkish companies. So I'm just going in to look at Pabrai investment funds in ticker real quick. Yeah, he's selling off Rain. My understanding, he's going to be out of Rain pretty soon. It's not a long-term bet for Pabrai. Shinnikin, I think, is a long-term bet. I think he's just kind of juggling around some cash to free up some cash to buy these new bets in Turkey. So that's my thoughts on Shinnikin. Michael, companies that go to zero is usually due to excessive debt. Yep. What is the simplest way to check the bankruptcy risk in a company? Can you walk through an example? That would be a great video, actually, Michael. The simplest way to check the bankruptcy risk in a company. There's a factor that came across my radar at one point. I think it's like the Altman Z score, something like that. You might also look. I know there's people who did an analysis not long ago on Hertz. Hertz filed for bankruptcy. I would just really dig into the debt, right? What is the debt made of, right? Is it capital leases? How long term is it? What are the terms? I was really impressed by Matthew Peterson, going back to Matthew Peterson, trying to wrap his head around the debt for Seritage growth properties. It was just too much for him. So he actually hired Danielle Town, right? Phil Town's daughter, who is a lawyer, to dig into the debt structure for Seritage growth properties. So you can even go that far to really understanding a company's debt, how to really make sense of it and assess the risk of the debt structure. So, the simplest way is to find a company that has more cash than debt. Not a guarantee that they're going to be responsible. Ideally, management has skin in the game as well. So there's some shared, there's an alignment of interest there. But Yeah, there are a number of factors out there to gauge bankruptcy risk of different companies. So you might just do a search for those. According to ticker, Daily Journal Corp does not own BYD anymore. Any idea how to confirm this information? Did it show up on ticker at one point? You could also, there's sort of an SEC equivalent in China. I did a video on this way back. I think it was related to Li Lu's holdings. So potentially you could just find that database and search for Daily Journal to see if you can see directly what Daily Journal owns in China. I haven't been following Daily Journal's holding of BYD. You could potentially, just ping Matt Peterson through Twitter. I found him fairly accessible through Twitter. That's another, you guys, Twitter is phenomenal, okay? In terms of being able to access people that you really wouldn't be able to get access to any other way. You're probably not going to be able to email Matt Peterson. But Twitter, because a lot of these great investors are still very early on in Twitter, like they don't have huge followings, you can still get through. You can get through to people. So yeah, those are a few ways I might approach it. Kevin, that is a fun little, what is that, like a little ghost man, little marshmallow puff man. Thanks, Kevin. Any comment on INTC Intel? The stock is down, but has great cash flow, and there is some insider buying today. It's not a company I've looked deeply into. Yeah, I think partly because I'm in Micron already, and that's similar enough to Intel that I don't want more exposure to that industry. Current ratio. Yeah, current ratio is a good one to look at to gauge bankruptcy risk as well. Current assets to current liabilities is the current ratio. Just one. Hey, Brad, currently reading The Little Book That Builds Wealth by Pat Dorsey. That could be one to read. I'm having more and more respect for Pat Dorsey as I dive into these, dive into investors' track records, things like that. And Warren Buffett, the interpretation of financial statements, loving both, great synergy. Okay. So it sounds like Just One is enjoying reading those books together. Great. Thanks, Just One. Those sound like fantastic resources. Watching from Lagos, Nigeria. I'm a big fan. Awesome. Wow. Lagos, Nigeria. Cool. That is cool. Andy, any thoughts on Anadolu Hayat? Yeah. So that's, I haven't, so it's insurance and pensions. That is not something I think I'm capable of understanding. Okay. So even if I see Pabrai buy into that, it's probably something I have to take a pass on. Yeah, those are my initial thoughts. I don't think I'm capable of understanding it or even being comfortable in it from a shameless cloner perspective. Kaz, started reading Buffett's letters from the 60s until now. Been really hard. Do you have any resources which summarize points of each of Buffett's letters year by year we can go through? So no, but I'm sure they're out there, like cliff notes to Buffett's letters over the years. The approach I would probably take, and this is something I picked up from Monish Pabrai, you can get the recordings of the annual meetings, all of the Berkshire annual meetings, I think back to like the early 70s. And you could listen to those at like 1.5x or 2x speed. Ideally, you'd be able to get versions that just kind of record Buffett and Munger's responses, because a lot of time can get taken, people asking questions. So that's kind of what I would drill into. But again, my stage of life, being the father of 2 young kids, I'm more oriented towards taking this stuff in audio format. So I'm sure those resources are out there, Kaz, and I'm sure they're well worth tracking down to really dive into Buffett's teachings. And Schumann, keeping up with the Joneses. Yes, thank you, the Joneses. The Kardashians. That's another one. We could go with Kardashians. Let's not try to keep up with the Kardashians. Hey, Brad, from Seattle, missed the beginning. Well, you will be able to see it. This is all being recorded, and it takes like, I don't know, 24 hours for YouTube to work its magic in getting this live after the live stream, the recording. Awesome, from Seattle. Yeah. Curious how the smoke has been in Seattle this year. We've had a very good year here in the Bay Area for smoke. And we got you guys, it rained like 9 inches over the weekend. Okay, it was ridiculous. We had flash flood warnings in Marin. It was pretty phenomenal. But the beauty of that, the fire season is over. I think it's safe to say, at least in the Bay Area. Any book tips for behavior finance? Yeah, probably Poor Charlie's Almanac. If I'm interpreting you correctly in terms of behavior finance, meaning how to understand the psychological aspect of investing, check out Poor Charlie's Almanac. Charlie Munger is a student for life when it comes to human behavior. Okay, so we're getting near the end. We've got about 4 minutes left. If you really want me to get to your question or comment, hit up the super chat. It's just that little box down near the bottom that has a $ in it, and I will definitely get to your question. Or it's another way to support the channel, so really appreciate that. What companies in Turkey have you added on besides Races? None. Okay, I've only bought Races. Were you able to identify Monish's positions? No, but I got that lead on the one ANHYT. Okay, it's a pension and life insurance company in Turkey. So, if you're eager to clone more of Pabrai's positions in Turkey, maybe have a look at that one. JC, have you had the chance to have a look at Tianli Education in Hong Kong? It seems to be a pretty unique market misunderstanding. I have not. Tianli Education. So I presume, yeah, this has just been driven to the floor in the last year. I assume that's because of what the CCP came out with about how, was it education companies or tutoring companies could no longer be for-profit companies. They had to be non-profit companies. Maybe there's something about the way Tianli is structured that, that doesn't apply to it. It's an investment holding company providing education services in China. Yeah, so there may be a nuance here where, there's a ton of upside because of what the CCP came out with recently around regulating companies in the education sector. So let me know in the live chat if that's true and what you know about it, JC. But yeah, it's, as far as size, it's a 412 million market cap company. So that's kind of right in my wheelhouse of sizes of companies that I'm particularly interested in. Don't know if I want more exposure to China at the moment. I've got exposure through Alibaba. I have exposure through Prosus, which is a majority owner or a large owner of Tencent. So, but I'd take a peek if you can tell me a little bit more about what makes it a unique opportunity. The Little Book of Behavioral Investing by James Montier, right? So we've got another little book. The little book that really got me interested in that series was The Little Book That Beats the Market by Joel Greenblatt. Fantastic book. But it sounds like there's a number of great books in the Little Book series. And Luis is probably responding to Jay asking for any tips on behavior finance. So yeah, check that one out, The Little Book of Behavioral Investing. Facebook's business is not social media, it's advertisement. Yeah, that is true. Again, you know, the way I would answer that is I'm just not on Facebook anymore, and I see a lot more people leaving Facebook than joining Facebook. But you know, I haven't looked at the numbers. I haven't looked at sort of the daily active users on Facebook over time. It's possible, you know, there's markets outside of the US. You know, I'm just assuming it's declining in the US, but it's possible there's markets outside of the US that are seeing very healthy growth in terms of daily active users on Facebook. Edward, Nick Sleep mentions that insider ownership is not necessarily always a good indicator. Sorry, I'm forgetting the exact page in the letter. Yeah, I'm going to take a look at that, Edward. Appreciate that. Probably the easiest way is just to, you know, do a Control F through the Nomad investment partner letters and search insider ownership or something similar to that. I didn't understand his reason for this, to be honest. Okay, yeah, I'm going to take a look at that. I've got a lot of respect for Nick Sleep. I know Hamish Hodder just put out a video on, you know, how to value companies from Nick Sleep's perspective, and kind of Buffett as well. Of course, Nick Sleep got a lot of his, you know, was inspired largely by Warren Buffett. Went to a Berkshire Hathaway annual meeting, I think it was back in the early 2000s, and it really prompted him to start his own fund and run it kind of in alignment with how Warren Buffett runs his fund. Ooh, wow. We got a $10 super chat from Pavel, #1 fan. Pavel, you are currently my #1 fan. Appreciate it, buddy. Longtime fan here since you had less than 100 subs. Wow, that goes way back, Pavel. That goes way back. Really appreciate your continued support, my friend. Okay, we're going to do maybe one more. Oh, Dark Knight. No, where is it? Luis, I'm a nurse too. Woot, woot. Awesome. I got a very special place in my heart for nurses. Let's see. One more. Edward, the only book I've reread was The Intelligent Investor. Okay, I love how Buffett pounds in the value investing framework. It just resonates really well. Awesome, guys. So I will leave it there. Thank you all for being here every week. This is this is the highlight of my week as far as YouTube goes. Just hanging out with you guys, seeing what's on your mind. And a lot of this is going to inspire, you know, what I make content on. So the more I can engage with you guys, the better I can make content, particularly for you, what you're interested in. So appreciate you all. JC, just real quick on that company out of Hong Kong, basically trading at a PE of 2 and growing at 40%. Okay. Well, that's compelling. All right. So thank you for that, JC. I will look deeper at that company. Tianli Education. Appreciate that hot tip. And with that, I will see you all later. Thank you all for being here. Much love. See you next time.